Good day, everyone. It's a new day in the world's financial markets. Today is October 30th, 2025, and this is part number one. In part number one, we discuss the overall general health and direction of the markets. We go back for the near past, and then we discuss the near future. So we start with gold. We can see the chart of gold, which I share with you pretty much on a daily basis now. And we can see each bar is 1 day. And the yellow line is the 50-day EMA, 50-day exponential moving average. The white line is the 100. The 50-day on the XAU now is 38.50. That's where we believe gold is going to go into this channel. Keep in mind, this line is rising. So if we talk in a week, this could be 38.60 and so on. So it's very important to understand what it is on a daily basis and realize that once gold goes into this channel to the yellow line or below, you are at a major support area, and it's advisable not to be short there. For example, 2 days ago, we hit 38.86, slightly above the yellow line right here, just 2 days ago. So that was beginning of the support. So that's for the daily charts, and we can see clearly here going back how this support area has acted. Every time we go to the yellow, between the yellow and white, it's been a support area between the 50-day EMA and the 100, over and over and over, starting 2 years ago when this rally started. And another thing to note, two important factors why this was a top. Of course, we talked about it, many reasons. We were 15% above the yellow line, above the 50-day EMA, extremely overbought. We also rallied 25% above the previous high of 3,500, 25% exactly. And that high back in April, the 3,500, the old high, happened to be 25% above the high before it, the 2,800 that we hit back in October of 2024. So we rallied 25% to new highs every time, it seems, lately. We also happened to catch those tops in April and October, 6-month cycles. And we also happen to be 15% above the exponential moving average, not to mention other factors. So every time this happens, we go back down to the support channel and we rest, take a break for 3 to 5 months or so before and if we are going to make a new high. So the odds are huge now in favor of going sideways. Okay, even if we try to rally, it will not, in my opinion, make a new high. Very unlikely. We will try to rally, fail, and we're going to end up in this channel, build the support, go sideways 3 to 5 months, and then rally again if we're going to rally. So that's as far as gold is concerned. Now gold is moving within 144 points a day. That's based on the last 9 days. That's the average move per day from high to low or vice versa. That's the range for gold per day. That's extremely volatile. Typically gold will move around 1.5% max per day of its price. So gold should be moving about 60 points a day based on 4,000. Yet it's moving 140 or more, sometimes even 300. But the average has been 144. That's historic. We think that will continue to contract eventually and go back down to the normal levels of about 1.5% of the price of gold, i.e. $60 this day at this time. Let's go and look at the chart of NASDAQ. NASDAQ has been hot, it's been on fire, and it keeps going up. And here's the chart. We can see here how last time we hit that 50-day EMA right here, bounced off of it quickly. That's when Trump spoke about tariffs on China. It looked like the world was going to implode just about a month ago. And then, of course, no, we rally back up again, okay, to new highs. Same thing happened in April and March, but it was on a much bigger scale. Okay, it was more serious, at least it appeared to be. And we went into a brief bear market. We dipped 20% and then came back above it. But since then, the yellow line, which is the 50-day EMA, is your support, clear and obvious. Now, let's compare the same gold to NASDAQ or NASDAQ to gold. So when gold hit the top, it was 15%, the price reached 15% above this 50-day EMA. Well, the 50-day EMA right now on the NASDAQ is about 24,500. So if the NASDAQ were to be overbought using that same metric, it would have to go to about 28,200. But we're only at 26,200. So you can see here, that NASDAQ is still really not overbought by using that same metric. And I believe that. Now, it does not mean it cannot go back down here, but it just means I will not be entering a swing trade and going short, building short positions on something like this that has yet to even reach the extreme overbought levels. That's just one of the factors, by the way, is that 15%. But it will save you a lot of money if you get to the sidelines or go short when the market, or at least liquidate your position, your long position, when the market is 15% above the 50-day EMA. Over the long run, this will save you a lot of money. So at least that's the first thing to look at, but that's not the case here. We're 2,000 points away from it, okay? So NASDAQ moves within 400 points a day. And as far as how we're going to trade today, the way we do it is we accumulate data from 3 a.m. to 9 a.m., and then we use artificial intelligence to do backtesting on this data, and that will tell us what is the best direction for today. We'll look for a high probability of at least 66% probability of success in the direction we're trading, whether it's uptrend, downtrend, or sideways. So we'll come back later today and talk about how we're trading for today on all these markets. Until that time, I wish everyone the best of luck, and thank you.